Hey everyone, welcome to the KE Report in a daily editorial. Tuesday, September 2nd. Welcome to September, everybody, and a lot for us to talk about in markets and metals as we're chatting with TG Watkins. TG is the director of stocks at Simpler Trading, also editor of the Profit Pilot website. Click the link in the show notes to visit that Profit Pilot website and follow along with what TG is trading. Now, TG, to start off, let's discuss what's going on in the U.S. equity markets. Not off to a very good start, to say the least, in September here. The S&P down over 1%, Dow, Nasdaq, those are also down about 1% and 1.5%. We also have the VIX. That is moving up quite aggressively. It was at 19 earlier today. Look, this is after a few months of pretty positive trading action anyway, and summer that just almost seemed like the markets were consistently melting up. Yes, there were a couple corrections, but those corrections were so short and forgotten so quickly. Maybe investors are expecting this dip to also be very shallow, but curious what you think. Now that we've turned the calendar over, summer, for the most part, is behind us. September's starting off on kind of its back foot. Where do you see the markets going?
Yeah, for the most part, this is all kind of expected. We know that August is supposed to be weak, September is supposed to be weak as well, and I think we've bucked the trend pretty well in the fact that August actually made new all-time highs. That doesn't necessarily mean too much. I mean, of course, like, look, we just got new all-time highs on Thursday, and now here we are down quite a bit. So I don't look at that as like, oh, you should buy it because it's new all-time highs. It's just a marker, and it's good to know that the market was able to continue to press up. The internals, I actually made a video for my subscribers or anybody out there on YouTube if you want to go check out Profit Pilot on my YouTube page. And one of the things I was pointing out is that for all of August, if you looked at the advanced decline volume, there was pretty much no volume the entire month. That range, it was very range bound. It was very neutral, right around zero. Couple up days, couple down days, but just not much. All the big money just wasn't doing anything for August. And you could see that reflected in the indexes. And, the SPI went higher a little bit, but the Nasdaq was down, semiconductors sideways. And then we finally got Nvidia out of the way. So a lot of people were wondering about that. And then it is also just very interesting to see the characteristic of the market and how it cares about the calendar. And you could see this when we transitioned from July into August, there was a big down move. And here we are now August into September, and there's a big down move. And that's probably because of big hedge funds and firms and institutions. They want to be able to close their books on a certain month, and then they're free to move it around the way they need to. And I think that's just kind of why we're seeing it today, as the calendar rolled over.
Yeah, it's a good point. There's a lot of book squaring at the end of each month and then repositioning. But there's also the propensity of this market to buy the dip almost every time. And a lot of times it's those corrective moves that bring in the new buyers and give them the impetus to hit the bid. So do you think that the term healthy correction is there for a reason? If we had a corrective move, would that be the impetus to bring in the next wave of buying?
Yes, eventually. Now, short term, like just before I got on the mic with you guys, I was on the mic with my trading group, the Moxie Room, and we actually put on a put credit spread that expires Thursday. So I think that this move that we got down today with a little bit more of a bleeding, about an hour after the open, I think that's a pretty good level. I think we're oversold for right this moment, and I'd like to see if we can at least bear flag up for 2 days. And if we can do that, then we'll make good on this trade, and then we'll see if we actually continue moving lower for the rest of September. I don't want to be overly aggressive to the downside simply because, yes, every dip has been bought and it's been pretty amazing to watch. But I would like to see things refresh. I'd love to see things go lower. I've been talking about this for quite some time, and I think the Bears got very frustrated in August, and so maybe they're going to be a little bit gun shy for September. I don't know. But yeah, I'll trade it, but I'm not going to be overly aggressive. And if we can get things to cycle down or to flag or even wash out, something happens out there, any of that kind of thing would be great. And I think it would provide a good base or refresh for the end of the year. And I just think that we need these kind of things. You look at the SPX, you look at the NASDAQ, you look at the SMH, especially on their weekly charts. And I mean, we've had a huge move. Of course, we all know that from the tariff tantrum lows. But now price has been staying above the weekly 8 for so long. I think we need to start actually getting under the weekly 8, maybe closer to the weekly 21 before we can start seeing the next leg higher.
TG, in terms of the all-time highs that were hit last month and just the makeup of the market, we've been talking about how a lot of different sectors were leading and joining in to the rally. Did anything change at the tail end of last month in terms of leadership, in terms of really any market moves that had you a bit more worried?
Yes, actually. And in fact, a little plug for myself here. This Thursday, I am teaching a class about long-term trading, so using the Moxie indicator and my principles. And given that this is I believe to be a very, very strong market. Yes, we're going through a correction and pullback right now. That's totally fine, ebbs and flows. But we have made new all-time highs since the tariff tantrum lows, and I think that this market is quite strong. And so I know probably a lot of your traders or your subscribers like to trade long term. And this is what I'm going to be doing is in this class on Thursday, I'm going to be showing monthly, weekly setups and timeframes and how to trade this kind of stuff longer term. And so if you guys come in, it's going to be 30 minutes after the close, Moxie Trader, simplertrading.com/Moxie. But the point of what I'm trying to tell you that is that we have seen leaders like Robinhood, they just got really, really too high. Palantir, same thing. They had kind of a blow off top on earnings, really, really big. Even Nvidia, we started seeing that thing start to come down just before earnings because all these things were super duper high. You could even look at Microsoft. It had a blow off top for earnings. Great, huge news. But look, ever since it had its earnings, it's been trending lower. And that's simply because all of these things went so high for so long, they got so extended and too far away from their moving averages and any kind of support that this is now the normal ebb to where prices are going to come down and we have to kind of reset and refresh things. And this is why we have seasonality, is because, after you have a really, really big move, which, usually, May, June, July, big moves, you've got to now digest those. And I think this is the normal digestion process that the market's going through, and it's called seasonal weakness in August and September.
Well, TG, just to that point about the seasonality, we have another factor coming up later in September into early October. And we've talked about this before on the show, but it's the propensity to sell the two Jewish holidays because there's a lack of money circulating in the market from some traders during that window. Maybe speak of that phenomenon and how you're going to play it.
Yeah, it's generally referred to as sell Rosh Hashanah and buy Yom Kippur. And, basically it's a Jewish holiday. And so the idea is that there is a large group of people who are involved in the market and they go on holiday and can't trade. So number one, you kind of have a vacuum as far as volume. Not a lot of people are there to push the markets around, which, hey, we've been seeing that in August just because institutions aren't really pushing the markets around. You can see that with the order flow that I was talking about earlier from the YouTube channel. And then, there's just that idea. It's like, okay, well, if traders have kind of picked up that this is a bit of a thing, okay, well, now if it's a thing, well, now it's part of the seasonality, and maybe that it just adds to the whole weakness for September. And so other traders are going to pick up on it. And so now it's just kind of a known thing. And I've seen it myself. I agree with it. I think there is some truth to it. And so I think we just need to understand that we're going to go through a period of weakness September, and maybe it's going to be in this time because that holiday moves around each year. And this time it's towards the very last week of September, even into October. And perhaps, this is just me speculating at this point, but perhaps that could be used as a little bit of maybe that's going to be some of the flush out. Maybe that would be a great reason to have the market find some lower lows and kind of wrap up September on a low. And then once the holiday is over, and then we get into October, and maybe the market's gone down enough, and maybe there are enough things to kind of start pushing the market back up after that. I don't know, just some stuff to think about and put in the back of your mind.
Well, we'll keep checking in with you to see when maybe those buy opportunities come. But again, most of these dips have been pretty shallow and bought back quickly. Let's see where this one goes. Let's talk about the sectors that are still doing very well today when there is a fair bit of red, but precious metals. Gold is making a strong move. Silver is making a strong move. Gold on the futures is almost up to 3,600. Silver is over $41. They're both up slightly over 2% today. And the stocks are following along. You look at the ETFs with the gold miners, the silver miners, those are up over 2.5%. So adding a little bit of leverage to it. But overall, we've been talking a lot about how the stocks have been moving higher as the metals were mostly moving sideways. Now we're getting that metals breakout. How would you play this?
Yeah, so I remember over the last few weeks, if not a couple months, that you and I have been talking because I know you and your subscribers like the precious metals, and we talked about gold all the way back in April, and I said, hey, I think this thing's overbought. I think it should come down, pull back, consolidate something. And then there was another little bit of a blip to the upside, basically at the end of May, beginning of June. And I was like, okay, that was a little surprising. I didn't expect it to move up right then, but all right. And then actually it settled down and traded sideways for another several weeks. And that whole time when I was talking to you about how gold was behaving, I said, I'd really prefer to see gold come into its weekly 21. And then as more and more time, more weeks went by, it didn't exactly pull back into its weekly 21, but it definitely went sideways. And I would make the argument that, let's see, July 28th was a nice dip and almost got to the weekly 21. And I guess that's been enough. But this nice flag, ever since you could say basically the end of April, has been a bull flag. And now we're finally seeing the confirmation that it wants to move up. I was actually just talking about this to my subscribers as well. There wasn't much of a setup or a trigger on something like the daily or the hourly chart because, it's so choppy that how do you know when it's going to finally break out? This is where I like to actually come down to even the 15-minute chart. And I know maybe some of your subscribers don't like that because it's too low, but I'm telling you, this is the kind of stuff that I look at and that I teach. And I have an exact setup right here on August 25th where price flagged into the 15-minute 50, and that would be my confirmation for when gold started to hook to the upside. And that was for GLD, that was about $310 and change. And yeah, that was it. And then if you look at GDX, we saw this one. This was pretty easy because price basically flagged into the daily 50 all the way back early July. And then there was another pullback flag mid-August. So GDX was actually quite obvious. That was probably the easier play out of all of them. And then it just kept going. And now the gold is moving, GDX is moving even more. And I think there's one thing, it could be money's moving around. If this is going to be seasonal weakness for equities, money's got to find a home. And if gold was holding up, then that's where it's finding it. Gold, GDX, silver. And then we could also maybe have some ideas about what's going on with interest rates. The fact that Jerome Powell has now indicated that, he's kind of starting thinking about interest rate cuts. There might be more people wanting to find alternative investments since interest rates are going to go down. So gold right now is definitely that vehicle. So it seems.
Just a follow-up question on the technicals when you were talking about the moving average and how it wasn't really pulling back to it, but it was the assets correcting through time, and so then the moving averages eventually catch up. In your experience, is that a stronger signal that it's better for the moving averages to gradually curve up over time and meet price versus price cascading down to it? How do you look at those any differently, those two kind of interactions?
I think it can, I think they're both valid. I think it just kind of depends on how the market wants to move. For example, GDX, if you look at the weekly chart, it did also one of those bull flags. It didn't even come into the weekly 21. It just went sideways along the weekly 8 and then popped. But if you look at the daily chart, it pulled back into the daily 50. So I think it's just kind of a relative thing. We've also seen things where you get price that does a pretty sharp pullback and then it launches price higher. So I just think it depends on how these things work. As long as the chart is strong and the sector is strong, whether it goes sideways or down and then sideways, as long as the confirmation is strength, then either one of them will work because that's why you talk about it. Buy the dip or it's a bull flag. And both of those are very bullish conditions.
Now, what about when we see something like GDX that broke above key resistance and has further moved higher on that? Sometimes we see these false breakouts. I don't think you can say that GDX has anything close to a false breakout because it's just kept on moving. Do you chase it?
I personally wouldn't chase this. The last opportunity for GDX that I would have chased it would have been sometime last week as price bull flagged into the hourly 50. That's about all I could do. At this point, I'd be like, if I'm not in, then I've missed it. I don't really want to do anything about it right here if I weren't already in. Again, I was just talking to my subscribers about this and I was like, hey, he said that he got in sometime early August. I was like, great. I wouldn't be adding or initiating on positions like this. If anything, I would just be managing your position and maybe at some point just be aware when this gets a little bit too high. Maybe you want to take some profit, take some risk off. But yeah, there's not much to really do up here. I mean, even GLD having a great day like it is, I think that this can go much higher, but I'm really not sure if I'd really want to be buying it today. I feel like you kind of missed your opportunity. If you want to get on gold, you really needed to have done it sometime last week. At this point, better to just kind of wait, see what the market does, and see if it provides any opportunities for you.
Well, TG, one more just on silver because silver is like the peppy, scrappy little brother of gold, and everybody has been waiting for it to get above $40 on the futures contracts, and it finally has, up at 41. So when you look at an ETF like SIL, which is the larger silver miners, it also just recently broke above some peaks. I think this happened at the end of last week the peak from 2016 and the peak from 2020. So are you a proponent of when price breaks above lateral price support like that, that's a bullish indicator? Or how would you look at SIL, the ETF for silver?
Absolutely. Yeah. I mean, you could, if you're looking at SIL, look at the period June. Yeah, just look at June, maybe even into a little bit of July, and you can see that price was holding just at and below $50, which was the exact level of those two previous highs that we were talking about from 2020 and 2016. And then look, as soon as it was able to get past that, it's exploded. So yeah, absolutely. You look at things like that all the time. You can see the same thing from the SPX. The SPX was able to get past its previous high of 6100-ish, and then it just kept going. So yeah, absolutely. Now the only other thing is at some points you usually see a retest, but that comes later if that happens. I would certainly look at something like this where it came up, met the resistance, bull flagged, broke out. Yeah, that's like a standard IBD type setup where it's a breakout trade.
Yeah, just continued bull market for precious metals, and it's nice to see a little bit of separation from the broad averages too. Precious metals seem to be kind of going to the beat of their own drum. Anything else out there, TG, opportunity wise that you're seeing that you're sharing with your subscribers?
Funny enough, we were kind of talking about crypto today. Now, I don't see too much to do with it right this moment, but given that the market was down the way it was, crypto was actually holding up today. I was kind of surprised about that. I do still like crypto. I don't think it is a flight to safety. I don't think it's going to buck the trend the way that gold and precious metals are doing that. I still think that crypto is a risk on type asset, but I thought it was interesting. I think for me, part of the reason that I'm chalking it up to is that crypto has already been pulling back for a few weeks. And so there's a chance that some of these things are already kind of down to where they find support or equilibrium. I would just say, I'll just point out something like coin. Maybe you call it crypto, maybe you don't, but it's in the crypto space. It's been sitting on its weekly 21 for about 3, 4, maybe 5 weeks. And so I'm kind of looking at it having already done its pullback and kind of sitting on an area of support. And now I think it's probably just a matter of time that it sits here, waits for the market to shake itself out, and then we can start seeing it get back in the game when things are ready, probably in a few more weeks as the market kind of goes through its September situation.
All right, there you have it from TG Watkins, director of stocks at Simpler Trading, also editor of the Profit Pilot website. TG, it's always great to chat with you and hear what you're trading and the different indicators and chart aspects that you look at to trade these markets. And right now, look, there are still opportunities, even as the broad averages are starting off this month a little bit on the back foot. Thanks for your time today, TG.